Hello everyone, Mike Arnold here, co-founder of Path Trading Partners on Bob Iacino. We had a request for Bank of America, BAC. Decided to do a little analysis. We'll probably still do it live on the live stream too, but just giving you a little preview. If some other people want some other stocks covered, I might consider doing it, depending on how popular it is and how much time I have. But it doesn't hurt to put it in, or especially email us at support@pathtradingpartners.com to make sure support gets it over to me. I don't always look at all the YouTube comments myself, but I appreciate every comment, and I did go through some yesterday, giving feedback on what we like, what we don't like, and key things everyone wants to see. Bank of America. So let me zoom back out. You can see this was the most recent high before the sell-off. If you went to here, that's fine. It just tightens your levels a bit. I like the fit of from this high to the key low back on March 22nd. So you also see here when it did make that key low, you see that really nice divergence pattern. We had the triple divergence, so 3 pushing down lows, 3 higher RSIs. So that's just a thing to watch when we do have either rallies or sell-offs and we talk about divergence. Since then, the rotation zone now has just gone flat, not even paying any attention to it. It's just flat and wavy because we're in a big consolidation pattern. To the downside, the key level we're watching is about 1965. To the upside, the key level I'm using with candle bodies is about 2485. So those are the major breakout levels. Then we're going to go to the minor breakout levels. Next area I'm really going to be watching is with, you see we have a couple gaps through these areas and it lines up. Nice key closing candle body, nice key closing candle body, gap open to that level, and another gap open to that level. So that is a very solid level. Just looking at candle bodies, it's something we call a significant level. 2345. So I'm going to be watching, especially with rally up, 2345, and then right above there is a 50-day exponential, 2365. So that's sort of my resistance range on any rally. So on any rally, those are the key levels I would be watching for. Above this 2365, we start watching then for the minor gap fills, but I'd then start watching, it's really getting above that 50 period, breaking to the upside. I'd start watching, to zero in on the 37.5% retracement, and if you look at our key candle bodies, we're looking at about 2490 level. Now, if we go to the downside, you see we still have this gap from the other day. There aren't as many great levels here, but we have this really nice close, this gap open here, this gap, and then running down to the close. So that's some minor significance right there. So about 2170. If we start trading below yesterday's lows, we'd be watching 2170. If we break below there, then we're just going to run down. There's some other gaps here, but I'd just really start watching around this 2017, 2020 level with the prior, again, 12.5% retracement. Then below that, the next major level, if you come over here, we have this gap open and then run up. We have that tying up with this key close. We have a couple lows in that vicinity, so that would be 1965. But as long as it's remaining in this range, there's not much to do besides play the shorter term plays. It's in consolidation and congestion. If we go out to the weekly chart, it's going to give us a little higher visibility. That's why I want everybody to start doing multi-time frame analysis. Even if you're just trading more intraday, keep the bigger picture in mind. Why? Because let's take a look at the weekly rotation zone. So remember, we had that divergence, rallied up, look where we rallied to, closed right at the rotation zone, rotating down. Now it's drifting sideways. It has not been able to get a close inside the rotation zone. So that's what I'd be watching for. Right now, the rotation zone's just a slightly around 23. If we get a weekly close above 23, I'd start paying attention, especially to that 2460 area. Then if we do that, we still have some major weekly gaps, which coincide with the weekly rotation zone, 2585. But right now, we still are rotating down. So on the weekly, we're in bearish mode. The daily, we don't have a rotation zone because it's in congestion. Remember, daily, it's all flat and wavy. This one, I just ignore it. It's just chopping back and forth. I just sort of pretend it's not even on my chart. And then 4 hour, it's still going to be, you can watch some of these to see if we get some separation and returns to the rotation zone, but this is really wavy also because we're in consolidation. So the only thing we can really go off is weekly we're in bearish mode, and every other time frame we're in consolidation or congestion, waiting for it to either break above some of those key levels I mentioned, especially on the weekly basis, that 23 level, or if that still has pressure to the downside, start breaking down and watching for those key areas on that daily chart. That's my coverage of Bank of America. Let me know if that helped anybody, and we will talk to you soon. Bye for now.